Well, here to talk more in detail about this, we're joined by Marshall Gittler, Head of Investment Research at FXPRIMUS in Cyprus. Lovely to have you on Money Matters. So an indecisive start to the day in Europe. What's running through investors' minds, do you think?
Well, I think people are really looking ahead to the non-farm payrolls tomorrow and how the Fed is going to react to the figures. That's really the main thing affecting the markets nowadays. Oil seems to have calmed down a little bit. It's been pretty steady. It isn't having the same sort of massive impact on the market that we've seen in recent weeks.
Quite a lot of turbulence, Marshall, on the Forex markets in which you specialise. Comments too from the German Chancellor Angela Merkel and the Japanese leader Shinzo Abe ahead of a G7 meeting, I suppose designed to stabilise the market.
Yes, the spin Mr. Abe gave on was really interesting. He said the G20 agreed that we should aim for stable currency markets. This is not at all what the G20 agreed. In fact, what they agreed is that they shouldn't intervene and that excess volatility is bad. I think he's really slanting the news so that to give himself permission to intervene to stabilize the yen.
Well, talking about the yen, expensive at the moment, is that harming the Japanese economy?
Well, everything's relative. You know, actually, the yen was recently at the weakest it's been on a real effective exchange rate basis, the weakest it's been since around 1985. So yes, it's more expensive than it was a few weeks ago, but still, we're talking about a much cheaper yen than we've had in decades. And so I don't think it's going to have that bad an impact. The country's exports are still holding up steady. And the value of imports is coming down. The trade surplus is rising. I think they'll be okay.
You mentioned earlier, Marshall, non-farm payrolls as the monthly check-up on the state of job creation in the United States. We're expecting that tomorrow. Markets in a bit of a holding pattern until it comes out. What are investors expecting?
Well, the market estimate was for something around 200,000, which is what it's been over the last several months. But the ADP report yesterday was much weaker than expected. That was down at 150,000. So maybe people are ratcheting down their estimates. But the ADP report is notoriously unreliable. On average, it misses the non-farm payrolls by 80,000. So I think we could still have a 200,000 NFP, and that would still put the Fed on course for hiking again sometime later this year.
And why do non-farm payrolls matter vis-à-vis what the Fed's going to do? Well,
they have a dual mandate. They're required to target stable prices with maximum employment. So if the they haven't reached their inflation target yet, but they have reached their employment target. But if the employment target starts slipping, then really they're slipping on both sides of the mandate and they can't move. So people are really watching their one successful side to see if that holds up.
Okay, we'll have to leave it there. Marshall Gittler, thanks very much indeed.